Are we on? All right. Good morning. This is Jesse Regan with Preferred Lending Solutions. I'm here with Brent Sidel, also known as Fine Print Brent. He's going to tell us a little bit how the market is being affected by the recent Fed increase in rates. Brent?
Yeah, thank you, Jesse. As most of you are probably aware, we did see a Fed rate market hike on March 15th. And, obviously that's unnerving to a lot of people who are shopping for homes right now. Of course, that short-term rate does affect the long-term mortgage rates quite a bit. So you're going to notice that as the year progresses, if our economy continues to strengthen like it has been over the first quarter, we're going to continue to see a couple of more of these rate hikes throughout the year. Now, the Fed's been pretty dovish about, when they're going to do this and how much they're going to do it by. So we saw a 0.25% hike on the 15th. We're probably going to see 2 more of those before the end of the year.
Okay, so with the new administration coming in, we saw that the rates jumped up about 0.5% to 0.75%. Do you anticipate the rates going closer to 5 by the end of the year?
That's a very strong possibility. A lot of that, again, has to do with inflation, how those figures look. Some of it has to do with, what the Trump administration does as far as the health care bill that they're looking to pass, and tax reform is a big thing that's going to be factored into that market as well. In fact, if we see that tax reform bill come in, I anticipate we're going to see a lot of strength in the market, and that's going to really push the Fed's hand to go ahead and move interest rates up again.
Okay, and that equates to less buying power for consumers, correct?
It really does. What really happens with that is it erodes that person's buying power. They're having to spend more on that principal and interest payment, and just gives them less buying power in the market. So.
Okay, awesome. So we anticipate this goes for government loans as well, correct?
It definitely does. This is pretty much across the board, all the different loan programs. Your 30-year fixed rate conventional mortgage is the most popular, of course, but it's going to affect your rural development loans, your FHA loans. Anybody who's looking to purchase a home, it's going to have an effect on it.
Okay. For the layman, what's a good barometer indicator to follow the market? Does the interest rates follow the Dow? Do you find if the Dow's on an upper tick that the rates usually follow it?
Probably the best single indicator in the market, if you're wanting to watch what interest rates are doing, is the 10-year Treasury bond.
Okay. All right. Well, thank you, Brent. That's great information. Once again, it's Jesse Regan and Fine Print Brent Sidel with Preferred Lending Solutions for your mortgage market update.